Folks, happy Father's Day to you, and welcome to Best Stock Charts for the coming week. What we're going to talk about today are, of course, our top 5 favorite stocks for the new trading week. We're also going to talk about the signals by the market that this market was in trouble. It began several months ago. I'll share with you one of those charts, and 2, a more recent chart that signaled that a break was about to happen. We'll also talk about what the markets have wrong here. Why are they misinterpreting the Federal Reserve's statement on Wednesday, which was, frankly, a very dovish statement? The markets interpreted it as being very, very hawkish, and why the markets have this completely wrong. So before we get into it, please smash that like button, bell button. We're going live tonight, 6 p.m. Eastern Standard Time on YouTube. Join us. We'll discuss the opening price action of the futures market. We'll talk more about inflation and what the markets have wrong. But before we begin, I want to share with you something I shared on Thursday Night Stock Charts Live, and that's our strategy. Let's begin first with market signals, and I want to share with you a couple of charts. One is the Dow Transports, and I was discussing this with members on one of the market wraps, actually all of the market wraps from last week, because we always go over the transports. And what happened here on June the 10th was that we broke support. And I warned, this is a canary in the coal mine. We have a lower high and 15340 spot 86 on the Dow Transports was the line in the sand. If you get a lower high and a break to new lower lows, then you have a new confirmed downtrend on the Dow Transports. Now, this is a daily chart. This may only last a few weeks, maybe a couple of months. But long story short, the Dow Transports broke last week. And here's the weekly chart. And again, I use the Dow Transports as the canary in the coal mine for where the stock market's usually going to go, because the transports usually lead the way, either to the upside or to the downside. So you can see last week we broke support. We're probably going lower. We did find support at the rising 20-period moving average. It held. Might we pop on Monday, Tuesday? Sure, that's quite possible. Will we probably roll over? Yeah, it's probably likely. So the other chart that we were watching, and for all intents and purposes we got short of, was the IWM, the small caps. Now, we got short right here in March. The reason is that we were trading up and into the third standard deviation Bollinger Band in red. You're not supposed to be there. I'll save you the technical jargon. You're not supposed to be there. We are extremely far extended from the rising 48-month moving average. Never in history have we been this far extended. This is the impact, the adverse impacts, the unintended consequences, or the intended consequences in some cases, by the Federal Reserve of cheap money. So the more they keep printing money, the more you're going to get these inefficiencies in the market. This is not supposed to be this way. So we took advantage of it. We got short of the small caps, and so far this month, we're flashing a bearish key reversal bar. And how do we know that it was time to get short? Well, if you take a look at a weekly chart, we broke out here in March, and then we fell back down into a trading range. It became a triangle formation, and I was tempted to stop out on this breakout the week of April the 19th. I said, you know what? Stand firm. Stand firm. We pulled back, we got a retest, and then we rallied. And my commitment to myself was that if we broke out to new all-time highs, I would stop out of the short trade. But it didn't happen. And last week, we had an outside reversal bar, or a bearish engulfing. I have a 5-part video tutorial below. My top 5 favorite candlestick patterns, free. Just enter your email address, and you'll get that. Back to this chart here. So this is a very bearish chart. And the reason why you have these small caps moving lower is that the markets are perceiving that the U.S. economy is going to move into recession. Why? Because they're convinced that the Federal Reserve is going to raise rates. But they didn't say that. That's the funny part. All they did is they readjusted their dot plots, which Fed Chair Powell walked back in his testimony or his press conference, and you have the possibility of a rate hike in 2023. That's a year and a half from now. So I don't understand what's wrong with this market when he stated also that you're going to still have $120 billion per month worth of the Federal Reserve buying U.S. debt so the federal government could spend like drunken sailors. What's changed here? Also, you have the Fed's fund rate at 0.25. I did a very conservative back of the napkin calculation of CPI over the past 5 months, 2021 through May. We're running at 6.8% inflation. Fed's fund rate, that's the cost of borrowing from the Federal Reserve to the banks so they can lend out money. The cost of that borrowing is negative. The Fed's funds rate is negative. The money that you're getting paid on your savings account is negative. You are losing money. So people are worried that there's not going to be any inflation, that it's transitory, it's going away. They're crazy. Inflation is here. The Federal Reserve is admitting it. So why people are selling gold and silver is beyond me. We were buying it on Friday. Not aggressively because there could still be more downside. But if you liked it, meaning NUGT, it's a leveraged ETF. If you liked it at 80, you got to love it at 58. It was down 25% last week, and it's probably going to move lower, and we will be buying more. So this, if anything, this sell-off in gold, silver, the miners is transitory, temporary. That's the only thing that's transitory and temporary because inflation is here. Stagflation is quite likely because you have the job market, which is just a nightmare. Net, month over month, you are seeing job losses. They expected 1 million jobs last month. They got what, 200,000? They expected 360,000 initial jobless claims last week. It popped back up above 400,000. So everything is going in the wrong direction, and the markets are selling off what they should be buying right now. So at some point in time, people are going to become unfogged and realize that inflation is going nowhere but higher because the spending by the federal government just continues unabated. And until they stop the spending, inflation is going to rise. Let's get to our charts. Now, the first chart up is going to be NUGT. This is one of our positions that we currently hold, but we're looking to add to it. So we're going to add it to our best stock charts for the new trading week because I think it's important. I rarely do this, talk about our current positions as watch stocks. But when I see things go on sale for all the wrong reasons, then I really need to be hyper-focused on it and look to add more. Now, we did nibble some, not aggressively on Friday, but we are looking at support levels down at, let's overlay my support levels, down here at around, let's call it 56.30 per share. And ideally what happens here is that we bounce off of the support level, rally and close back above $60 per share, 61. 61 is a better number, on a bullish key reversal bar by the end of the week. If we get that, then we'll be looking to add more aggressively to that position because what that's telling us is that the market is saying that, okay, you had your oversold capitulation sell-off, and then buyers stepped in where they should be, buyers of like mind, to rally the shares back above resistance. That's the ideal circumstance here. That's what we're looking for. Until we get that, we're not going to be aggressive buyers because we don't know for sure whether or not this support level is going to hold. We don't know how irrational the market's going to be and throw the baby out with the bathwater. So we don't want to catch a falling knife, but what's reinforcing our thesis here about NUGT is that on a 4-hour time frame, you have the RSI, the relative strength indicator, at 17, 18. If you drill down further, 2-hour chart, you have about 13 on RSI. So if they really annihilate NUGT on Monday morning, you could expect I will be buying more, especially if by the end of the week they happen to rally it back and close it above $61 per share. That's the game plan, NUGT, because, folks, the government's admitting that inflation is here. They changed their statement, meaning the Federal Reserve, Fed Chair Powell, changed their statement to validate that inflation is here. So if inflation is here and the government's not going to stop spending and they're going to continue printing dollars and the Federal Reserve won't raise rates until maybe 2023, why wouldn't you be buying gold right now? It's crazy. And the bond market rallied bonds last week, sold off yields, crazy, absolutely crazy. So we're going to take advantage of this very, very short-term anomaly. So watch this. We'll revisit this in a couple of weeks. Moving on further to the GDXJ, which is the junior miners. A tremendous amount of technical damage was done here last week. But where they closed it was at very strong support. That doesn't mean we're not going to go lower this coming week. So if we break this support level, I'm probably not going to step in and buy more until they reverse it and to close it back above 47.68 on a weekly time frame. Because if they fail to reverse it and it continues lower, well, you can head all the way back down here to $42 per share. You do have another support level in here that's worth memorializing at $44.50 per share. So what I want to do is I want to set an alert, keep a little bit of sensitivity, and we'll keep this active for a couple of weeks. And our alert is set. Now, what I also want to know is if we do break through this support level, we want to hedge the position by selling covered calls, but very short-term covered calls, because the calls aren't going to be worth that much. So we're going to want to stay very close to the money and not go out too far, because you'd be selling cheap call options and you'll be waiting on any rebound, waiting for a rally back, and it'll drive you crazy because the call options just simply won't have any time decay. So we're going to stay very short term, using weekly call options as a hedge. Longer term, we have enough liquidity to weather the storm, so we're confident that this is going to turn around within the next couple of weeks. So moving on to other positions that we're looking to put on, and that is CRISPR. There are some growth stocks out there that have really bright futures. CRISPR is one of them. And in fact, it actually broke out last week to close above resistance at 127.33. That's a very positive event. Daily chart. We had a daily breakout on Friday. So the growth stocks did well on Friday. Biotech stocks did not do poorly last week when compared to the rest of the market. You saw a breakout on CRISPR. What I like to see here is a retest of this breakout point, and we're good to go. Oh, by the way, we're using TrendSpider automated technical analysis. Use the link below, 35% discount code. They have a 7-day free trial offer. Volume is good on Friday, Thursday and Friday as well. So CRISPR looking very good. This is going to be a long-term hold. You're seeing higher lows. So CRISPR looking good. Twilio. Now Twilio had a really good week last week. You had an undercut double bottom here the week of May the 10th relative to the lows of March the 29th. And we were able to rally, which is a very, very positive event. The question is, does it have the strength to break above this weekly resistance level? No resistance. All we care about is a close. We use a 4-hour time frame. Now, the key to remember here, folks, is that, growth stocks normally do well in a declining interest rate environment. Yields pulled back dramatically last week, and that was due to fear that we were going into recession. Now, I don't think that the yield is going to be able to stay down this low. And if yields pop up higher, it's going to be difficult for growth stocks to break out. Now, Twilio is a very good company. Maybe it's going to be able to weather the storm. But Watch the 10-year yield. If it begins to hook back up, that may put pressure on some of these growth stocks. So it's critical to wait for a breakout above resistance. And if you see Twilio break out with rising yields, that's a really good sign. It means it's impervious at current anyway to rising yields. So here's our breakthrough. Now, once we break through this resistance level, what we'll be watching, because this is like a W formation, an undercut W formation, here is your pivot point right up here, 405.02. That is a very, very good breakout point to add more. If we close above that mark, you need to be buying more of the shares. I'm loving the RSI. And if you take a look at the daily chart, here's the value of the automated trend line. Click of a button. And you can see this green line. I'll take it back off, put it back on. This is automated. This is the algorithm for TrendSpider. It broke out above resistance last week. What I'd look to see here is, do we do a retest? I want to know if we break down. All right, alert is set. And note to self is to watch the 10-year yield. Because, again, if the 10-year yield is moving up higher, it's going to make it difficult for Twilio to continue up higher. The same holds true for most growth stocks. So our alert is set. We do have another resistance level up here. We already have an alert set there. We're good to go. So we set our alerts so we're not impulsive, right? We use a rules-based approach. If this, then that. If we break out, we'll buy or we'll add more. If we pull back and do a retest of support, well, we'll open a small opening position. And then if we break out above resistance, we'll add more. Again, a rules-based approach. The last chart up is more of a ETF. It's the Investors Business Daily Top 50 Fund. And these are your top growth stocks. And to me, you know, I want to look to add this fund on a pullback, because this is the reason why you want to keep your gunpowder dry. When this sells off hard, these are the top 50 high growth stocks in terms of fundamentals, in terms of technicals, and I want to be a buyer of these. There's a reason why I won't buy now, and perhaps I shouldn't even have them on this commentary for best stock charts for the new trading week, but it's worth the conversation to say, you know what, let's watch this. Let's watch for the sell-off, and hopefully you see a bloodbath here so we can buy more. And why do I think that we're probably going to pull back further? I'm going to start off here with a monthly chart, and when you throw on the automated trend lines, you could see that all these topping tails came at this automated resistance level. And what it's telling you is that there's a good chance here, given that we have a bearish reversal bar on the month so far, that we could head lower. Where do we want to buy? Well, I want to start thinking about buying right down here. I'm going to take the automated trend line off, put it back on. There is support. Keep a little bit of sensitivity on. And we're going to keep this active for a while. 60 days will work. And the note here, long nibble, that's just a reminder to stay small. Make sure that this holds. If it's tested for a couple of weeks and it holds, then we may add more. But you never know. We could break to new lower lows. So we want to stay conservative. And our alert is set. Now, what might else happen here is that we may hold this support level. I want to know. I'm not going to buy here, but I want to know if we break through. Because if we close down below this line here, that's a real serious break of support. The trend is broken, and you really want to wait for historical support levels to get hit. Weekly chart. Now, weekly chart, we're putting in lower highs, and we're threatening now to break down to new lower lows. And in fact, we broke down below this weekly support level. Maybe we'll bounce back tomorrow, being Monday. But as it stands right now, on a weekly time frame, we broke trend. Daily chart, So here's the break on a daily time frame. Bearish key reversal bar. In all probability, we're going to move lower here. Here's our alert. And until that gets hit, we're going to set it and forget it, especially if yields move up higher. If yields move up higher, this is going to get hit pretty hard. So with that, folks, everybody have a great Father's Day. Don't forget, if you have a moment tonight, join us 6 p.m. Eastern Standard Time, live on YouTube. We're going to go over the futures action. We're going to talk about inflation, what the market has wrong about inflation, and why the Federal Reserve is not going to be making any moves on interest rates anytime soon. So what you're seeing right now is an opportunity in the market, in particular in gold, silver, the miners. So with that, folks, everybody have a great remainder of your weekend and a profitable trading week. Be well.